Hello, trading is closed on October 5th, 2020. We'll do our disclaimer, go over our calls. It's my plan for trading tomorrow, Tuesday, October 6th. No guarantee it's the right plan. Trade at your own risk. Here's my email. Okay, my call over the weekend, I said there were a number of patterns on Friday that should lead to higher prices. They failed at the close. I said it was a very negative pattern, could even lead to a crash almost. And the one thing that would kill the idea, the only thing that would kill the idea, would be if we gapped up and overtook this high. Well, before the market opened, it was clear we gapped up and overtook the high, so the idea is killed before the open, according to the rules. We get to cross a target off the list, 33.8672. Note the support right here at the target. During the day, we got a sell signal. It did work, but you couldn't really trade based on this alone because the minimum target wasn't very far, and there's no requirement to go as far down as we did, even though it was recovered. Well, we have our standard count here, and we aren't challenging the idea that we're still in wave blue C, but what happens in here just isn't as clear to me, and so I'm not going to try to count these waves. I tried quite a few things. None of them really struck out and hit me. The low bar of the day came at the open. Typically it's a rally day, just as was yesterday Friday, I should say, when you have a low bar at the open, then your rally tends to be a rally day, especially when you close near the high, tends to follow through. And since tomorrow's pattern has the early high, which is typically a rally day, the odds are pretty good we're going to see higher prices tomorrow. And once again, that's all dependent upon us holding this at tomorrow's open. If we gap down smartly, the call's killed before the open. So how much higher should we go? Well, the truth is, I don't know. You can always come up with some kind of excuse for the rally ending at some point, and I think at some point it will end. So here's one excuse. This is a trend line. Gapping over, it's a valid break of the trend line. Take the highest distance, longest distance under the line. You should travel over the line by as much as you went under it, and that's today's high. It can be a move to the end of the rally, but it doesn't really have to be. It's a target more than a stop and reverse. And pending tomorrow's open, I'm still looking for higher prices tomorrow because that's pretty bullish action. But if we do drop, that's an explanation. It's not what I think will happen, but you have to keep it on the table. Tomorrow's pattern has a early high. Doesn't mean you won't gap down. Typically, it's a rally day with a late high. Failure is a straight line drop. Gapping over Friday's high invalidated the negative pattern. Rallying from an early low to a late high usually, not always, usually gets follow through, and you see a higher high the next day. Doesn't mean you have to close higher. But unless we gap down smartly, I think we'll see higher prices tomorrow. And that is today's call.